All right, let's get started. Before we start off, I would like to thank the team at SCB 10X for organizing the conference. Hi, everyone, my name's Karan. I'm a vice president for GIC. So I've been with the firm for about 6 years, and I lead our crypto investing practice. I have the esteemed fortune of being involved with a lovely company called Anchorage for about 3 years now. We have the president and founder, Diogo Monica, with us today. He is a security super expert, has a master's and PhD degree, helped to write several papers and create patents on secure communication, payments, and encrypted hardware. In addition to being a founder, he is a prolific speaker and investor, and we are so glad that you're here with us today, Diogo.
Thank you for having me. It's the first time that somebody describes me as a super expert, so I'm I'm very excited.
Yeah, let's do it. So you spent a few years at Square and at Docker. You created their security systems. You had tens of billions of financial assets flowing through things that you built. What convinced you to quit and to a crypto company?
Yeah, so there's two parts to it. Maybe I can describe both pretty quickly, but one of them is the fact that if you think about my career, everything that I've ever done was building security infrastructure. So cybersecurity infrastructure. Part of the reason why I joined Square as an early employee was because at the time, the thing that you could do as a security engineer that was the highest level of security outside of maybe protecting nuclear launch codes was protecting money, credit cards, payments. That was what was at the time. That was like the highest level of security you could do. And so I was so excited to join that team and to join that company. I ended up leading the platform security team. And it was actually hundreds of billions of dollars of volume and hundreds of millions of credit cards. Probably at this point, over 1 billion credit cards that were on file that we stored. So that was really exciting. If you work in security, that's what you want to do. You want to test yourself against the harshest environment that you possibly can. And at that time, it was payments. And then turns out that this crypto thing came along. And then all of a sudden, private keys were worth billions of dollars, maybe hundreds of billions of dollars, and they were completely irrecoverable. And so now we go from digital payment systems with clawback to private keys that are completely irreversible transactions and that are just private keys by nature. So it just up-leveled the type of security that you needed to have in any type of company. So how could a security engineer at heart not be incredibly excited to jump in and tackle this challenge? So to a large extent, me coming into crypto was a little bit of a recognition of that, that I wanted to apply my my knowledge to the harshest possible environment, which we all know is crypto.
So we'll stay on the theme of you just wanting to do the most difficult thing possible. But before we go down that route, I just wanted to speak about the first few years of your product building. You took a very unique approach to infrastructure and the quality of that for your products. Just speak about that and your design principles. So when you first created Anchorage.
One of the luckiest things that happened to me was the ability of joining so early at a company like Square. I don't know if everybody knows about Square, but Square is one of the largest fintechs in the world. It started out by being this company that produced a little credit card reader that you could plug in on the headphone jack when iPhones actually had headphone jacks back in the day. You'd plug it in and anybody could accept a credit card. It was founded by the founder and ex-CEO of Twitter, which was Jack Dorsey. It had a fantastic team, and it was a really cool, neat experience. You had an iPhone, you had a little headphone jack, credit card reader, and you could take any credit card. That was the original conceptual version of it. The interesting thing for me is that if you think about a security engineer, it's obvious how it applies to that. Hardware security, software security, payment security, all of those aspects. However, Square was a consumer product. It was for small and medium businesses, but it was something that had to be incredibly usable, well-crafted, well-designed. And Jack Dorsey cared deeply about the design and the user experience. So one thing that we never did is we never went to a consumer and a user of Square and asked them, how they like the security of the system. Because then their question would be, well, should I be worried about this? Should I be worried about my credit cards getting stolen? So security had to disappear in the background, and it had to be usable in a way that they just never had to think about it. So that actually was how lucky I was to, as a security engineer, instead of going down the path that many security engineers, I would even say most go, which is the most, if there is a technical, no matter how complex way of configuring a system, then the system can be safe. I was instructed exactly the opposite in the principles of design and great engineering, and how you really had to take the complexity away, and how usable security was the only path towards real security. And so it was really from this ethos of usable security from design first principles that then took me to Docker, and then ultimately led me to build a very unique security and custody system at Anchorage, which really, I believe, is the single best available system that has not just the best technical security, but also the best usability for our clients.
Absolutely. I think of it as the one Ferrari, so in a land of just clicks or Japanese cars. Question for you then, is a good enough product good enough when it comes to security or safeguarding assets?
So I think actually one of the things that we don't talk a lot about is there's lots of hacks in crypto in general, and they really ranges across DeFi and centralized infrastructure companies, primarily exchanges, really. But one of the things that I've always said is that even in the players that are more institutional and more regulated, one of the biggest risks to the industry has always been that one of these massive players that is started, whose company is started by somebody from the traditional financial industry that doesn't really appreciate the details of security as much as they should. They accumulate such a large amount of assets, say tens of billions of dollars, and then by not appreciating, by having the CEO not appreciate the security of the system, they end up pushing the system to a thing, to do something that is not natural, and they end up getting hacked. That this has actually been one of the highest, riskiest things that the industry has to face, and really a systemic risk to the industry. Because it is one thing for some shady exchange to be hacked and for your assets to be stolen. Many of these large institutions would never custody assets with these types of exchanges in the first place. But it's another thing for you to have somebody that is reasonable, somebody that looks good from the outside, then also being hacked, because that really is a systemic risk to the industry. So I think to answer your question, no, there's no good enough. Security really is a process, and it's a process that is constantly evolving, and it is something that never really stops happening, and that you always have to constantly invest into, which is candidly surprising that Anchorage really is, to my knowledge, the only custody company that was actually started by two security engineers. Every single one of these large exchanges and large custodians were traditional finance people, web developers. They really didn't have the background in security. And of course, you can add that onto the team, maybe even to the founding team, and have great, fantastic engineers that come in and help you out. But it's different when both founders really understand security and are building a security first product than when security is a bolt-on or an add-on, which for the majority of the projects, unfortunately, it is.
Yeah, absolutely. Maybe let's switch some gears a bit and go into the sort of regulatory side of things. What is a qualified custodian, and why should the audience care about that word?
So a qualified custodian is a designation that exists in the United States. Effectively is set by the SEC and the 9040 Custody Act. And it basically says that a registered investor advisor needs to custody their assets with a third party that is a qualified custodian. And a qualified custodian is a set of sub-designations, but one of the big ones is that it is a bank. It is a bank, it is a broker-dealer, it is an FCM, there's all these designations that it can be, but effectively at the end of the day is a bank. And look, the concept here actually makes a lot of sense. The goal is, if you are a manager and you are managing other people's money, the SEC wants you to be responsible with that money. And what's a better way to be responsible with that money than to have all of the funds being managed by a third party or custody by a third party, and you have two independent entities that have to collaborate to actually give a report to the client. So it's a lot harder to abscond any funds or to do any sort of weird accounting when you have a custodian ultimately that is also independently reporting to the client how many assets are held in their name. So this is how the traditional financial industry has evolved over hundreds of years of some of these disasters happening. And these exist for a reason. And interesting, by the way, to note that it's not just that qualified custodians are important in the traditional financial world. They're even more important in crypto, Because in crypto, because there was no regulation to start with, we've actually ended up in this weird place where there's a retail exchange that is an order book, that does settlements, that's institutional, does retail, it is the custodian, it is everything all in one, which absolutely does not happen in the traditional financial industry, and has been one of the biggest checks and balances that crypto hasn't really historically had, and is necessary. So all these concepts are interrelated, but qualified custodian is the most generally talked about high-level degree of scrutiny that the SEC mandates for registered investor advisors, and who is the third party, or which types of third parties can actually custody the funds.
Yeah. So let's sort of back in time a bit. So 1 month after we had closed our investment in your company, the board meeting, I still remember you said, we're going to apply for a US federal banking charter. Why did you make that decision? How do you look sort of back on it? And why did you drop such a big bomb after the first month of our closing?
It's a funny one. I mean, to your point of always trying to do the hardest thing, this is very much one of them, right? Look, when we started Anchorage, we started with a set of principles in mind. And one of the principles was what we discussed. How do we do the right thing from a security perspective from day one? How do we not just have a secure system, but really a safe system? A secure system is a system that can be configured to operate in a safe manner. But a safe system is a system that doesn't allow you to shoot yourself in the foot. So how do we have a safe system for our clients who actually do custody of their assets, staking of their assets, governance of their assets, and participate in DeFi? How can we allow them to do that from a technical perspective? The second ambition that we had is we're going to do this for institutions. We want to allow large institutions to come into crypto and for them to have the technical ability and the rails to come from traditional finance to crypto. And then the third one is, well, if we want to have institutions as our clients, then we need to be regulated. And so what is the highest level of regulation that we really can get in the United States and abroad too, but in the United States primarily, which is where the majority of the crypto market is and the majority of our clients still are, what is the highest level of regulatory scrutiny in the land? What is the hardest thing to get? And so we started on a path that ultimately ended up with us applying for a federal charter under the OCC, being the first ones to get the federal charter for the OCC, and really still today being the only crypto company in the United States that has a federal license for the past 2 years. So it's been an absolute unique privilege and allows us to do many things that we couldn't do otherwise, but really at the end of the day, to have this stamp of approval for our regulatory scrutiny, for the way that we run operations, and ultimately also for our technology that just leaves our clients, the largest of them all, the most comfortable.
Yeah. So it's quite well sort of documented that you were the first, but I think something that people might not appreciate is 2 years on, and you're the only company that has met the bar of the US government. What do you do differently?
So the first and foremost, I think it is the going contrary to the Silicon Valley ethos and asking for permission instead of forgiveness. So that's not how the Silicon Valley ethos works. Usually it's the other way around, right? You ask for forgiveness, not for permission. We've just decided to always ask for permission and go down the path of engaging with the regulators from day one. It is not just the OCC that we engage with. We engage with all of the other tens of regulators that that are in the United States and that we're subject to. And from day one, it was always about how do we're collaborative, how do we educate, how do we show them that our technology is different and that this should exist. If they want to have a safe and sound financial system, then they need this to exist. They need professionals that have dedicated their lives to the security of private keys to come in and build an actual product that has the security of the private keys at a world-class level, regulated at a world-class level. So this is actually something that they should want for this ecosystem to exist, to thrive, and to really be under their umbrella, and to have a world-class regulation to match the world-class security. And so it was really that posture that led us to do the arduous path that it was to really get the bank, and that it takes us generally on this path everywhere we go of making sure that we are meeting the highest regulatory scrutiny in the land.
Yeah. Something that I would love early stage sort of founders to sort of learn from you for the next question. I think something you did really well was to continually change the management team up level, sort of build resources. So in the functions that the sort of government actually sort of cares about. Talk to us about sort of growing your risk, compliance, bank secrecy, anti-money laundering teams. Talk to us about
it. Was yeah, it's a really hard one, because it shouldn't be a surprise to anyone, but crypto custody is very distinct from traditional custody. Crypto custody, it is fundamentally a technical endeavor in a technology that doesn't really fit into the boxes that the regulators want us to fit the boxes. The technology just doesn't cleanly fit a security box or commodity box or whatever regulatory box you want to put it in. And it is pretty clear that there's very hard things to do in crypto. If you want to meet the travel rule on Bitcoin, there's no such mechanism on Bitcoin that is native that allows you to do that and meet your regulatory obligations. And you are working on a chain that was very much, whose inception was to a certain extent the opposite of the traditional banking system, and moving away from this concept that we have of only VASPs actually move money amongst each other, and going to a peer-to-peer, complete peer-to-peer system where any kind of wallet and any kind of computer or phone, doesn't really matter who they are, any kind of private key can move in a completely permissionless manner money on chain to one another. This is just contrary to what the regulatory perimeter is supposed to do. And so it's just incredibly hard to actually do it. So it's not just that we were the first, it's that we were the first to encounter this level of scrutiny in this bar within this crypto asset land and within the crypto ecosystem. So it's very hard to do this, because you'd expect if the OCC has been around for hundreds of years, and if there have been banks in the United States for over 200 years, for there to be lots of available talent that you can just get off the shelf, that you can just take in, and they have experience and they know what to do and they hit the ground running, and you have a bank in no time. Well, it turns out that would be too optimistic if you actually took that path, and that it's incredibly hard to find talent that is, especially at the time when Anchorage was started. Remember, Anchorage was started in 2017. Right now, crypto has gone through a couple more cycles and has established itself as an industry. But in 2017, coming into crypto from traditional finance, we're still seen as edgy and surprising, and it raised some question marks on people's heads. And so maybe you weren't getting the best talent, or maybe if you were getting the best talent was talent that was there for 20 years and has done the same thing for 20 years and does not know how to actually change their mind to actually adopt the standards, and not just the rule of law, but the spirit of the law, to this new ecosystem. And so you're between a rock and a hard place. You either have people that are malleable and younger in their careers that may want to come to crypto companies, but didn't really have the skill set that it took to really run an OCC federal bank. And maybe you had the people that could run those companies, but didn't really have the mental flexibility to actually come down and understand how the assets worked in the first place. So it was very hard for a long time to really find a team that gelled with the right sets of talents, with the right sense of complementarity to really be able to have a world-class team, which we absolutely have right now. Our team is absolutely world-class. People come from TradFi. We have ex-OCC examiners. We have people from just crypto native side of the house. We have consummate Silicon Valley engineers. It really is a perfect combo, but it took us a long, long time to get there. And unfortunately, there's some of it that is us learning and iteration, and some of it that is just the maturity of the space. It was very clear that the quality of talent changed dramatically as the space also matured, which ultimately allowed us to actually build this world-class team.
How did you poach sort of people from the traditional finance sectors? Was it hard to get sort of people that had been in compliance functions for traditional banks for decades to come and join the disruptor?
Surprisingly not. And the obvious reason for this is that compliance got really, really heavy post 2008, as we all know. And it was very easy to see that many of these compliance professionals were looking themselves for a different challenge, a different place, a different challenge to sink their teeth into. And so you actually end up having a lot of people that were just interesting, fascinated, and not just the technological aspects, but the appliance of compliance to what was going to be a clear revolution in the way that finance on the internet was happening. And so you actually found a lot of interest. The challenges, again, early on was the risk appetite. You have a very cushy career at a big four bank, and you don't really want to take the risk to go to a startup. And Anchorage now is more of a scale up more than a startup, which also helps. The brands, nobody had heard of us, either Nathan or myself, and nobody had heard of Anchorage Digital or Anchorage Digital Bank. And so that's also something that plays against you. People want, especially in traditional finance, validation of their peers. I'm going to a place that we've never heard of. That's weird. That's not typical. So really, those were the hurdles. And also maybe the mismatch of compensation, where in Silicon Valley, we compensate people by doing the right thing, which is aligning them with the outcome and in the form of equity. And then to many folks in the traditional financial world, they understand options better than anyone. They understand the instrument of options, but they don't know what it feels like to be compensated in it. They understand what a hedging is and what buying options is and what actually taking upside is, but they don't understand what it actually means to be compensated with options in their traditional world. It seems like somehow the instrument feels different when part of your compensation on a yearly basis is in options than when you're kind of like intellectually doing compliance or legal analysis for one.
That is funny. So switching gears a bit, I know that the current sort of regulators would want all investment advisors to work with qualified custodians. I know you submitted a sort of comment letter to the SEC on this topic. Could you speak through the risks and concerns you see with the regulation and sort of what you would want to see happen?
Yeah, so we first and foremost, we applaud the fact that there is updates being done to the custody rule. And by and large, we agree with the ethos behind the changes that are being proposed. And there's many of those changes that are fantastic and they should happen. There's some of them that we think that could actually be tweaked to enable some of these financial institutions to be able to do the things that they want to do ultimately, which is make great investments and participate in the crypto ecosystem in an easier manner. But one of them is there's like these protocols that are very small for which maybe there's no actual qualified custodian like Anchorage out there where we support that asset or we don't support that asset yet. And to a large extent that maybe shouldn't prevent the actual institution from doing that investment, because if there's no actual solutions out there to support it, maybe there should be an alternative for a specific amount of your portfolio that could actually take. People sometimes call it the side pocket, what have you, but take risk on the custody elements when you don't have an actual qualified custodian available. But really the biggest comment is agreeing with the general set of principles that the custody rule requires that the industry does not have, which is this lack of separation of custody of the order books and of the actual introducing brokers that we have in the traditional financial world, but really don't have in crypto. I think we're in agreement with that general gist that these things should be separated into different companies with different focuses, and with and that this we saw this with FTX, that it is very bad when you actually vertically integrate all of these functions in one, because then there's no accountability whatsoever. And it's a lot harder to inspect from the outside if there's something that is happening that shouldn't be happening. And, any kind of shenanigans with order books or any kind of shenanigans with the actual P&L or using clients' funds or what have you. So all of those things are things that we should be protected against, and the industry should be protected against by actually segmenting these types of responsibilities, which is something we very much agree with.
Yeah. So it's a pity that sort of regulation is a reaction to sort of things that happen, but whatever takes us in the right direction. For the things that sort of had happened, there's a long sort of laundry list, which people know: FTX, Signature, Silvergate, SVB. There's been a slew of bad news in the banking sector. Could you maybe speak about how all of that has impacted institutional participation in crypto? What sort of changes are you seeing on your banking platform, and how has sort of liquidity changed in the last few months?
The biggest impact was clearly that Signature and Silvergate before them were really the places where every single crypto participant was integrated with the Silvergate exchange network, SEN, to actually do instant settlement of fiat. So all the transactions on the crypto networks happen in crypto. And then say you are a client of a particular OTC desk or a particular custodian, you want to trade, you want to wire fiat, and you want the fiat to be moved instantly between bank accounts. They provided that service, and that service was great for crypto players. And so there was definitely a dominance of clients, especially at Silvergate, and a lot less so at Signature in terms of concentration of that their business being crypto. So the moment those two banks went away, it became a lot harder to actually do fiat banking for crypto. The interesting thing is that people could still do banking with stablecoins. And so to a large extent, we saw clients continue operating and continue doing business on Anchorage with just depositing stablecoins and withdrawing stablecoins instead of actually doing it in fiat. So even there, the alternative that stablecoins represent in terms of advantages to the traditional fiat system are also represented in an ironic manner of like, if we take away fiat, now we have, you know, the better version of it in a crypto asset custody. But it was just surprising and obviously made folks really look very closely on what does it mean to be bankruptcy remote in the fiat side, FDIC insurance, and start looking at run on the banks. And the thing that I want to say about run on the banks is that remember that Anchorage is not a traditional bank. We do not take crypto and then do investments with it. We are a full reserve bank. The crypto stays. And so there's no such thing on run on a bank when we literally keep your assets. It is more akin to a vault where all of your things are inside of the vault and nobody touches you until you go there, than really a traditional bank that is running a reserve bank and has 1 to 7 or 1 to 9 or whatever of the dollars available. So there's no way for Anchorage to have a liquidity crisis for withdrawals because all of your deposits are there. You can check them on chain. They're all there. They're all yours. Only you can move them. And so in that sense, it kind of like proves sort of the point that a crypto custodian in a bank like Anchorage Digital Bank doesn't actually suffer from this issue because it's a full reserve bank. So even there, it's also a little bit ironic that an issue with the traditional financial banking and this vulnerability that was exposed doesn't really affect Anchorage at all from a crypto perspective. So even there, like another ironic component that I thought it was interesting of note.
Absolutely. The way to fix something like an FTX is to have more decentralization. And the way to fix something like a Silvergate is to have more like, stable coins. So is crypto the problem or the solution, Diogo?
I think it's definitely, in this case, it is showcasing the problems, and it's definitely a solution.
Yeah. Final question for you. So you have now been through a few cycles and have seen lots of growth. How has your leadership style or sort of philosophy to leadership changed? And so what advice would you give to some of the members in the audience who want to learn from you?
So yeah, my leadership style actually changes with whether we're in a bear market or a bull market, turns out. That's something that you have to tune your wartime CEO and your peacetime CEO hats. And the reality is that you're always constantly changing depending on how the company is going. And so there's always an ambition that I have in terms of having the single best executive team, delegating responsibilities, focusing a lot of my time on strategy and really the things that I'm amazing at, and still meeting with clients and still making sure that things are going the right direction, but really empowering the team to execute on their own. And then there's times where you have to roll up your sleeve and be a micromanager and jump in. And really the art of leadership is knowing when to execute on which, because I think the ways to execute on each of them are known. And we talk about the timing is always the hardest. And that's just a feeling of what can your team support? What's the quality that you have right now? Where are you actually failing? Why should be you dedicating your time or not? And that's more of an art than a science.
Awesome. Thanks for that. I think that's all the time we had. I've gotten a few sort of...
I was having fun.
Yeah. Super fun, Diogo.
Great chatting with you, Karan.